Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Coinbase's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Coinbase is an online platform for buying, selling, transferring, and storing digital currency. It also converts digital currency into and out of your local currency. They are the largest cryptocurrency exchange in the US. The company is named after Coinbase transactions, which are special transactions that introduce cryptocurrency into circulation. In October 2012, the company launched the service to buy and sell Bitcoins through bank transfers. The company is headquartered in Wilmington, Delaware, and was founded in 2012. The ticker trades on the Nasdaq, Frankfurt, Xetra, and Vienna stock exchange. Let's get started with the model. This is a large cap company, 18 billion market cap. They're trading at $71 a share, and they have 262 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had a ton of free cash flow in 2021, over 10 billion. In the trailing 12 months, it's 6.4 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that also peaks in 2021 at 3.6 billion. Revenue is the sales for the company, and that has gone down from 7.8 billion to 7.2 billion. But their revenue is only $500 million in 2019, so it did grow a ton since then. This is the company's income statement. The top line is the revenue, the sales. Below that is the cost of revenue. These are the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit. That was almost 6 billion in the trailing 12 months. Below that is their operating expenses. These are all the expenses not directly related to generating the revenue. Gross profit minus operating expenses gives you your operating income, and that was 1.5 billion in the trailing 12 months. It was over 3 billion in 2021. Below that is other income and expenses. These are all the gains or losses not part of the company's core operations. Then your pre-tax income, your taxes, and the bottom line of the income statement is your net income. You can see their net income is higher than their pre-tax income because they posted a tax credit of 1 billion in the trailing 12 months. The company probably had lots of losses in past years. Now that they're profitable, they're taking advantage of those losses and posting through gains. This is their income statement from their 10Q, and this shows us the first quarter of 2021 compared to the first quarter of 2022. And their revenue in the first quarter was 1.2 billion, down from 1.8 billion. Most of their revenue is from fees they charge their customers. They charge about a 1% fee per transaction, and that generated over 1 billion of revenue. 965 million is from retail customers, only 47 million from institutional. They generated 82 million of revenue from rewards, more fee revenue, interest income, and from subscriptions and services, they received 22 million. So the company doesn't care if customers make or lose money as long as they do transactions, because that's how they make a bulk of their money are from transactions. But that's the same way stockbrokers made money, from transactions. In the past, if you used a website to buy stocks like E-Trade, you'd have to pay a transaction fee. Now there's no fees. So we may get to the point where there's no fees for crypto transactions. If that happens, this company wouldn't have much revenue. They had 300 million of expenses from transactions, 570 million from technology and development, 200 million from marketing, 413 million of G&A, and 258 million of other. So they had an operating loss in the first quarter of 554 million. Last year they had a gain of nearly 1 billion. Their net loss in the first quarter was 429 million. Last year was a net gain of 770 million. So their loss per share was $2. Last year they had a gain of $3.80. Last year they only had 80 million shares outstanding. Now they have 217 million. So they added a lot of shares, a lot of dilution. They have 98 million users, which is up 81% year over year. And their monthly total users was 9.2 million in the first quarter. That's up 50%. The assets on their platform is 256 billion, up 15%. but the trading volume is down. It was 335 billion, now it's 309 billion. Their EBITDA last year was 1.1 billion in the first quarter. This year they pretty much broke even. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates or loses from its operational business. They spent 92 million in CapEx. Operating cash flow minus CapEx gives you your free cash flow. They have lots of free cash flow each year. But even with all this free cash flow, they added a lot of debt, 3.4 billion in 2021. This is the operating section of their statement of cash flows, and this is the first quarter of 2021 versus the first quarter of 2022. And the way you calculate operating cash flow, you start with your net income or net loss. Then you have to add or subtract the non-cash items on the income statement. We have to add back 229 million of impairments, 315 million of stock-based compensation. And then we have to adjust for changes in working capital. So they lost 830 million of cash flow in the first quarter. Last year was a gain of 3.4 billion. But most of that gain was 2.4 billion of funds in customers' accounts. So it's not their money. These are the funds due to their customers. This is the investing section on their statement of cash flows. They spent 186 million in business acquisitions. They purchased 870 million of crypto assets. They disposed of 400 million. But these are assets they purchased for their customers, not for themselves. This is the financing section of their statement of cash flows. They added 149 million of debt. They had to pay 142 million on taxes. These are the taxes that are related to equity awards for the employees. This is the equity section on their 331 balance sheet. They have 6.5 billion of equity. They raised 2.6 billion from selling common stock. And they profited 3.9 billion from running their business. Retained earnings is a sum of all their prior net incomes. Let's look at the capital structure. 6.5 billion of equity, 3.6 billion of debt. They're 64% equity, 36% debt. And they could pay off all the debt with the cash on their balance sheet and still have 2.7 billion of cash left over. This is their capital structure since 2020. You can see all the numbers were really low in 2020 and the beginning of 2021. Then everything went up a lot. Their cash is a little lower than their equity balance and their debt is down here. So it's good to see they have more equity than debt. I gave them the highest whack on Finbox, 8.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 29 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $25 billion. We divide that by 262 million shares. And we get a calculated stock price of $97. They're trading at $71, so they're trading at a 27% discount. It's a buy according to the model. The company's revenue target in 2024 is 7.9 billion. And the target in 2023 is 6.7 billion. 2022 is expected to drop to 4.7 billion. You can see right here that revenue drops a lot in 2022, then it starts rising again. And I continued growing their revenue into 2025 and I got 9.2 billion. In 2020 and 2021, they generated more free cash flow than revenue. In the trailing 12 months, it was a little less than their revenue, which doesn't really make sense. You can't generate more cash than your revenue. A lot of the free cash flow are funds in customers' accounts. So it's not money due to the company, it's due to the customer. So to calculate their future free cash flows, I used the industry average of 18%. So I multiplied their future revenue estimates by 18%. That's how I got their future free cash flows. The website Simply Wall Street values the company at 133. They're saying it's 47% undervalued. 20 analysts priced this stock and the average price target is 177. The low is 60, the high is 380. This is where the stock has been trading since it IPO'd. So it's done really poorly since it came out. It did drop initially, then came back up, and it almost hit 350, but it's down over 80% since this point. In the past 52 weeks, the stock is down 69%, while the S&P is down 1%. The 52-week low is 41, the high is 368, and the stock is trading well below its 50-day and 200-day moving average. 27 million shares have been traded each day on this stock. 45% of the shares are held by institutions and over 6% of the shares are shorted. If you invested $10,000 into this company when they IPO'd, you'd be at $2,100 today. That's a 79% loss. The CEO's salary is $1 million a year and their total compensation is $3 million. In the past 12 months, there's been no insider buying, just a couple sells, one for 17,000 shares, another for 10,000. I'm sure both these people are happy because the sell price is a lot higher than it's trading at today. 36% of the company is held by the general public, 32% by institutions, 20% by individual insiders, and 12% by venture capital and private equity firms. Their employee count has been going up over the past couple of years. They're currently at 3,700. The CEO of the company owns 15% of the stock. His valuation is worth $2.3 billion. The next biggest shareholder is Andreessen Horowitz, then Ribbit Management, another insider of the company, and Kathy Wood's ARK Investment. Let's look at their financial ratios. They have a really good PE below 8, that's stock price over earnings per share, price to sales of 2.6, price to book of 2.8, and an unreal price to free cash flow of 2.9, that's stock price over free cash flow per share. Let's look at their non-current assets. 1.3 billion of crypto assets held. These are assets they hold for their clients, not for their own personal use. The value of the assets they're leasing is $91 million, $66 million of property and equipment, $1 billion of goodwill. Goodwill is a premium you pay when you acquire another company, $219 million of other intangible assets, and $1.2 billion of other. Let's look at their non-current liabilities. They owe $66 million on lease payments. They have $3.4 billion of long-term debt and $24 million of other. They have a high return on invested capital of 32%, a really good ROE of 37%, and a good current ratio of 1.6. That's current assets over current liabilities. Same thing with the quick ratio since they have no inventory. It's 1.6. Let's look at their current assets. $6.1 billion of cash, $27 million of restricted cash. Restricted cash is cash that's set aside for a specific purpose. For example, to acquire another company or buy a building. They hold $10 billion of cash for their customers, $180 million of USD coin. Their customers owe them $346 million from loans they provided, $57 million of income taxes receivables. This is how much money the government owes them in taxes, and $191 million of prepaid expenses. A prepaid expense is when a company makes an advance payment for a product or service that they're going to receive in the future. USD coin is a digital currency that's backed by the US dollar. So the value of a USD coin should always be around $1 since it's pegged to the US dollar. Let's look at their current liabilities. They owe their customers $9.7 billion, but we saw they have more than that in assets for their customers. They owe their suppliers $12.6 million, accrued expenses of $648 million, and accrued expenses when a company incurs an expense that they haven't paid yet. They borrowed $486 million of crypto assets, and they owe $33 million on their current leases. Their free cash flow in the trailing 12 months was over $6 billion. They have over $6 billion of working capital, so it looks like the company is well capitalized. The best way to look at ratios is to compare them to companies in the same industry. There are 249 companies in the same industry as Coinbase, and if Coinbase has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They rank 16th in market cap at $18.5 billion. The average is $6 billion. And all their price multiples are really good, a lot better than average. But some of these price multiples won't make sense because they're holding a lot of cash for their customers. It's not their cash. Generally, you want to look at the price to book when you value a bank. And this is probably closer to a bank than it is to some of these other companies. They have a high ROA of 13%. ROA is net income over assets, and a high ROE of 37%. ROE is net income over equity. To summarize, I have them trading at a 27% discount, but this is a really tough stock to value. It's like when I try to value a bank or insurance company, it's a bit complicated. But if crypto goes up, then the stock should go up, and if crypto goes down, the stock should go down. A big concern is they're reliant on their transaction fees. As long as their customers continue paying them a transaction fee, it's fine. But if a lot more competition comes out, and some of that competition doesn't charge a transaction fee, that could really affect this company. Even the CEO says he's unsure about the future of the company. But if you do like this company, it's trading at a much lower price than it has been since it came out, so it could be a great time to get in. I ranked their free cash flows 9 out of 10, their revenue 9 out of 10, and the ratio of 10 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.